Hi, thanks for joining me on my market report. My name is Mike, and this market report is about mortgage rates. What goes into impacting them on a daily basis? Are they moving upwards or downwards? What's kind of the news events that could potentially impact them on a daily basis as well? We don't get into rate quote as there are too many variables that go into rates, and so it could be a little subjective, and also different rate programs or different loan programs have different rates as well. If you guys need a rate quote, would like to get one, please feel free to reach out. I can give you a personal one as I am a loan officer. I do work with a national lender, so we can help you with in all 50 states. If you guys got different questions or different things about mortgage programs or rates or economy or anything along that line, we can help you out with. Again, I'd love to hear from you guys. Uh, if you guys are looking to refinance or purchase, need pre-approval, I'm here. Reach out and we will take care of you. Meanwhile, why don't we just jump right into this report? We'll start off with the economic report for the day. Today we got the Philly Fed Index. This is manufacturing in the Philadelphia region. We got Empire State Index, which had a pretty big drop earlier in the week. However, as you can see here, we had 31.5 back in April. Forecast was supposed to be a slight dip to 31, and however, it dropped down to 30.7. So it dropped about zero point 0.8, but not as bad as the New York one. The New York one had a much bigger drop, but still it did decline a little bit. Something we'll keep our eyes open. Now, we also got the initial jobless claims that come out every week. So this is for reporting of last week's. So the previous report came out at 376,000. However, that got revised downward by 1,000 to 375,000. Forecasters are supposed to show that trend continuing, that we're going to see every week that the fewer and fewer people are applying for unemployment at 359. However, instead of going downwards, it went upward to 412,000. Last but not least, we got the leading indicators. This kind of gives us a guide as to looking forward, usually about 6 months ahead. And the previous report back in April said 1.6%. However, that got revised a little bit lower to 1.3%. And forecast was at 1.3%. It came in at 1.3% in as forecasted. Now, something else to kind of look at, we did see a revision to the continued claims. This kind of gives, it's not a huge report, but we kind of like to look at these to see if people are staying unemployment or if they're leaving unemployment going into jobs. That was revised at 357, and it had a slight increase in continued claims. So again, something we'll kind of keep our eyes open, that instead of going downwards, it went slightly upwards. Let's take a look at the headline news. Stocks are a bit mixed again. Similar to yesterday, NASDAQ is the lone index in positive territory. And right now we're kind of dealing with the post-FOMC announcement yesterday. So the markets really, in both markets, from the stock market and the bond market, basically went into tatters. They basically, like everything, they over exaggerate on they get a little bit emotional and they get over exaggerate, and then usually today is kind of like the cleanup day, so to speak. Sorry about that. So what was it? It came in slightly hawkish, but I don't know if it's really that much difference. Basically, the Fed reiterated that they do feel inflation is transitory. They will keep an eye on it. A lot of people were looking at the dot plot because there was a few more members that were willing to raise rates sooner, like in 22 and 23. However, Jerome Powell did reiterate, saying that this is kind of a mute point because they're not going to start raising rates until they're going to give us a clear signal as to when they will, far down the line. But they basically were saying that this is a moot point because we're looking for data, and we don't know exactly how fast that data is going to come in. We want to see a jobs come back to basically where before the disruption. They want to look at where the economy is at. They want to make sure that it's in a stable position before they start pulling back, and that includes the tapering. They're going to continue the tapering until we see significant improvements, and they don't want to commit to saying that this is going to be in 6 months or whatever because there's too much uncertainty that's going on right now, and there's too many variables that could play into it. So they are watching that, and so people are, as you'll see, are kind of rebounding a little bit here in the markets. In the bond market, here's where we are. We dropped about 52 basis points, which translated to about a half a point. So that no point loan yesterday quickly within hours after the announcement, basically went up a half a point as a cost. We're about halfway there at 30 basis points upwards. So we did show some improvement after yesterday's close. We could potentially close this gap here a little bit further. It is steadily rising as we've been doing this report. It started off earlier down, up 14 basis points when I started over the last hour, and within hours it kind of doubled it. So here's yields. We started about where we were. We did yesterday. We tested the 25, the technical, and the 50-day moving average. Pulled back. It started basically close below the 25-day moving average, and then we dropped all the way down below all those technical levels, as well as a 100-day moving average. And we even tested the technical floor, which has been pretty strong support below it. So right now we're seeing just under 1.49 on EOS. So market trades are improving. We're not quite to levels in pricing where we were prior to the announcement. However, we're about halfway there, about a quarter point difference. We could see that come back potentially as the markets are subsiding a bit and they're kind of listening to what the Fed was saying. It's digested a little bit more and they're feeling a little bit more at home, or at least getting a little bit more on board with the Fed with their announcement yesterday. So stay tuned. We'll see if we'll get all that today, or if it's going to take a little bit more time to recover all that loss we had yesterday. All right, folks. If you guys got any questions, again, please feel free to reach out. If we can help you guys in any way, we're here. And if you guys like these videos, I greatly appreciate if you guys could smash that like button. This certainly helps out the channel. And you guys have a great rest of your day. We'll see you in tomorrow's video. Bye-bye.